Good morning, everyone, and welcome to this live webinar that's being organised as part of the Finance and Accountancy Virtual Work Experience powered by SpringPod. Now, whether you're just getting started with the programme or whether you've been cracking on with it already, we hope you're enjoying it. Don't forget, if you've got any questions at any time or if you need support from a member of the SpringPod team, we're always here for you, so you can reach out using the green chat icon in the bottom right corner of the platform. So if you've got any questions about the program itself, then you can get in touch with us through there. So just a few housekeeping points before we get started. If you're a webinar veteran, then you'll know the score, so you'll know all of this already. But if this is your first, then it's useful to know that this talk will last 30 minutes in total. Please don't forget to use the Q&A function to ask questions to our guests today. They'd love to answer them. They're here to help. It's what they're here for. So definitely make the most of that time that you have with our guests today. And due to the number of questions that usually come through, we probably won't be able to answer every single question. So please do use the upvote function, which is the little thumbs up underneath each of the questions. And then what we'll do is we'll put the most top voted, most popular questions to our guests as well. So if you do see a question that you like the look of, just hit the upvote button and we'll put the most popular ones to our guests during the Q&A, which will be after our guest's presentation today. So if you do miss the webinar or if you need to leave halfway through, we've got you covered. Don't worry, this is being recorded and we always aim to have the recording available within a few hours. Really, you can get back at it within the next few hours. So you can come back and you can just watch it on demand if you wanted to make any more notes or if you just wanted to watch it again. So in today's webinar, we're going to be talking about banking, and joining us to do that is Godman Usman, who is the VP at Barclays UK and founder of Gen Money. Godman, thanks ever so much for joining us this morning. What I'll do now is I'll hand over to you for your presentation.
Awesome. Thanks, Joe. Good morning to everybody. It's awesome to be part of this webinar. As Joe said, we're talking about banking. I've been in that space for over 10 years and had many questions when I was your age about what exactly that entailed. So hopefully today in the space of 45 minutes, 1 hour, I'll cover with everything you need to know about banking. Let's start. So I'll start first with, what's your definition of a banker? Obviously, there's always headlines. Bankers or banking industry is always in the news, sometimes for good, sometimes for not so good. Here are some clips of how some mainstream publication companies have referred to bankers. On the left there, you can see there was a famous headline by The Economist referring to bankers as banks, playing with words as opposed to like gangsters. BBC News has called them masters of the universe, being the world's best paid people. There's also a very famous book about fund managers and the wider financial services industry, referring to bankers and money men as barbarians at the gate. So you may have seen this growing up. They're featured in I guess pop culture and all these different things. But we're here to look at what a banker actually does and actually how they're currently defined. So if you look at the dictionary, a banker is defined as a financier, depending on where they are in the banking sector. Someone that finances businesses or governments, organizations, charities, brands, or money men. That's another old term used to describe bankers, money men. So the dictionary says it's a person who's skilled with dealing with large-scale financial transactions. But it's also a bit more complicated than that. Banking has actually grew over the last kind of 30, 40 years. So there are new subsectors within banking, within financial services, which I'll go through and give you a taste into. In the retail space, and I'll kind of explain further in the presentation, the different types of banks we have out there. A banker can also be referred to as a bank clerk or cashier. In the UK, would use that term, or teller in the US. It's wider than just also banking. It could be an employee of a bank who receives and pays money out. So the question I have for you is, what do they actually do? That's why you're here today. Let's go into that. And I've brought some case studies to bring that out for you. So, what do bankers do on a day-to-day? I'll start with investment bankers. I'm currently in that space. I work, as Joe said, for Bar UK, and I've worked for other investment banks and other different types of banking institutions. Investment banks are global entities, global organizations who provide complex financial instruments, financial products, financial services to different types of clients, institutions, brands, and charities, and governments. But essentially, for today, I would say they are financial advisors who work with corporations, the biggest corporations you can think of out there, and also governments, sovereign governments, and they help those clients raise money, and they do that through different ways. So that could mean issuing shares. In America, they would use the word stocks. So that could be, as you probably heard last year, December, with Airbnb, which is a big brand, global brand. It was a private company and they wanted to raise more money to get even bigger. So they had to go on the stock market. They had to issue shares. And to do that, they had to consult a number of investment banks to help with that. Banks would help with structuring how that deal is going to look like, how many shares to issue, what price to set per share, create a brochure, target private investors, institutional investors, retail investors like you and me, and really apportion the shares globally. So which indexes to use? An index is the NASDAQ, for example. I'll explain a bit more about that. So this is a really good case study, a recent case study of Airbnb launching on NASDAQ, which is an index. So it's a platform to buy and sell shares. And they did what we refer to as an initial public offering, an IPO. So a bank was heavily involved in helping Airbnb with that process. So that's something you would do as a banker. You would do project related work. So most of the work is project related, day to day. That could take 6 months, that could take 3 months, that could take a year, even 2 years working on one project, because end to end, it's very complex for a number of reasons. Another case study I thought I'll bring to life is the acquisition of WhatsApp by Facebook. Facebook bought WhatsApp, I think 2014, and they bought them for $19 billion. So to do that was very complex. Again, a number of bankers were involved because of the size of the deal. Not even just one bank could process that deal. So you had, I think, what we refer to as a consortium of banks working together on different subparts of the project. So that was a really complex, global, interesting case study. So that falls in the realm of what we refer to as mergers and acquisitions. So if you're an investment banker, you would be exposed to M&A, mergers and acquisitions. In this case, it was an acquisition. They acquired WhatsApp, Facebook did. Another example is when Disney bought Pixar. They bought them, but it was a merger. So they merged together. So it's now referred to as Disney Pixar. So they bought that brand for $7.4 billion. And as I mentioned, it was a merger. So it was quite complex because what an investment bank will also do is they'll work with strategists and they'll work with consultants and look at how they can blend two different companies together. So from everything from the culture, and every organization, especially a big organization, has its way of doing business, way of doing things. So that really envisions their culture quite separately from another bank. So they look at how they can merge the teams together, the skill sets together, strategically why they'll buy that business. So in this case, Disney bought Pixar because Pixar was a specialist in pixelated animations. So any type of big animations like Toy Story, which is the biggest all-time animation, highlighted to Disney that actually animations of that quality, it's a growing market and it's going to keep growing. So it made sense to buy Pixar because they already had those skills in-house. So you're not just working on the financial modeling to work out how much you're going to make from cash flows, how much it will cost, but you're also working on the strategy and how the business, from the business side, the business model fuses together. So these are really good case studies to bring out to you. What does a banker do on a day-to-day? They work on projects, and they could work on those projects for a period of time. So that's what you would do. And you're essentially helping in that space of M&A, mergers and acquisitions, buying or selling shares, launching shares on a stock exchange like NASDAQ, like Airbnb did, or arranging the sell of a company. So someone that wants to actually sell their company, what we call private placement, or an exit strategy. So bankers are involved in a myriad of different projects and services. So I think at this point, let me explain to you the different types of banks there are. There's an ecosystem when we talk about banking. You hear the words financial services. There's an intersection there between financial services and banking. Financial services covers everything to do with money. So that's investment management, asset management, fund management, banking itself, investment banking, retail banking, insurance, reinsurance, auditing, consulting, strategy. It's a whole ecosystem. But specifically on banking, it has its own separate ecosystem, as you can see on the screen. And I'll highlight that for this presentation as 4 big areas. Investment banks. You've probably seen these brands before on the top left. Goldman Sachs is the quintessential investment bank. Barclays International is a investment bank which I've worked for before. Previously it was called Barclays Capital. And then JP Morgan, it's another huge, big global, mega global investment bank. So those are investment banks. They're very sophisticated banks. They're global. We'll look at what defines an investment bank in the next slide. And then on the right-hand side, you've got retail banks. Retail banks are your high street banks. They are the banks you probably opened your first bank account with when you went to college, or when you started school. Your parents opened for you, or your carers opened for you. So those are, like Barclays on the high street, or Lloyd's, or Santander, or any of those, HSBC. Those are the retail banks that you find on your high street. And then you have central banks, and I've had the opportunity to work for a central bank overseas. Central banks are very different. They play a central role in setting our interest rates, what we refer to as monetary policy, our inflation as well, levels, and financial stability, general financial stability, and money supply. How much money is printed, how much money is in circulation, and all of that. And I'll give you some examples from last year with COVID and lockdown. So some examples here that you'll have is the Bank of Japan, which is on the right hand side with the 2 horses. That's the Bank of Japan. It's a very old bank, central bank, one of the first. The Bank of England, of course, our very own BOV, so Bank of England on Needle Street. So that's a very old bank as well. And then the Federal Reserve, United States Federal Reserve. So that's the central bank in the US. Again, also a very old institution. They play a very different role from the other banks. And then the last player in that ecosystem is the neobanks. So your digital banks like Monzo, Starling, Revolut, N24. These are the digital native banks. You won't find them on the high street. They're purely digital. They're app-based. They all play different roles. So this is the ecosystem. So when you talk about banking, I want to be a banker, you need to understand where you want to sit, the different types of banks. And I've given some examples of what those banks look like. We can cover that more in Q&A. So in terms of how they differ, I've alluded to some of that already, but as an overview, I've highlighted some of those key differences here. So with investment banks, as mentioned, they help companies, they help governments raise money for expansion or for repaying debts through gilts, so bonds, gilts. I can explain what those are. So they help governments and companies with that. And they typically work with initial public offerings. So when a private company like Facebook wants to go to public, which it did many years back, investment banks were involved in that. Or when Facebook wants to acquire WhatsApp or Instagram, banks were very much involved in that too as their consultants. Bond issuances, you may ask me, what is a bond? A bond is a financial instrument. It's a IOU, so it's like a piece of paper a company will issue to investors and say, we will pay you back if you give us some money. We're going to use this money to expand our business. We're going into Asia, we're going into Africa, we're going to enter new markets, or we're going to enhance our product offering to existing customers or a range of products. So they would issue a bond with the expectation that they will pay some interest back to the investors who have loaned the money, borrowers who have lent the money to them. So that's how a bond works. They can get quite complicated because a bond is also, the interest rate goes up with the level of risk of the company or the country. So if a country is more risky, the interest rate to compensate the risk for the investors is higher. And you've got what we refer to as junk bonds. Junk bonds are for really risky companies or countries. So if you're lending money to a very risky country, we could use some emerging market countries as an example. You would require a higher rate of interest for that to compensate the risk you're taking, because they may not pay the money back, they may default. So there's a big piece around bond, how to price a bond, how to price the risk, the interest rates, how to structure the repayments, either it's on a monthly basis. So you as a banker would work on the structuring, on the sales element, how to get in front of the brochures, in front of investors who would be interested, how to secure the investments, and on all the different parts. And then there's mergers and acquisitions, which if asked to explain, it's quite cyclical. It's a cyclical business. Some parts of the year, mergers and acquisitions is quite quiet. And then sometimes throughout the year, it's very busy. And they're probably the busiest people in the bank, because when there's a deal, they have to deliver for their client. They need to make sure that this business can buy the other business and it doesn't fall through. So investment banks it's a very global, complex part of banking. It's the highest part of banking. Retail banking, it's all about providing financial services, financial products to retail customers like you and me. When we buy a house, we need a mortgage, so we go to a high street bank for a mortgage deal. That's very much what retail banks do. When we need a student current account, we open that. When we need an overdraft, we go there. When we want to open a savings account or an ISA, we go to our retail banks. That's very much what they do. Typically, they're local. You'll find them on the high street. They have ATM coverage, cash machine coverage, and you may ask me later, why is it Barclays is an investment bank but also a retail bank? I'll explain that to you. They're two separate entities. And then central banks, like I mentioned, their principal objectives is to provide financial stability to a country. That could be through money supply, making sure that there's enough money in circulation, making sure that other banks, retail banks, investment banks, are funded, adequately funded. So they set what they call capital adequacy measures, ratios. They have to calculate those ratios to say, does this bank, JP Morgan or Barclays, have enough money to cover, in case of a default from a major client? Do they have enough liquidity to cover if cash flow is constrained? So they run a number of things to make sure that banks are financially stable, big banks, because of systemic risk. Some people refer to systemic risk. And then the second function central banks play is to do with monetary policy. That's setting interest rates at the right level, to make sure that there's enough incentive for people to save money, enough incentive for people to spend. If you set a interest rates too low, no one's going to save money in the bank because there's no incentive to do that. So everybody will spend. And vice versa, if you set it too high, everybody's going to save their money in the bank. If the interest rates went up to 10%, everybody will put their money into a bank account and get 10% interest, on their money. And then they wouldn't spend in the real economy. You wouldn't buy from ASOS. You wouldn't spend on Instagram or anything like that. So it's a balancing game when it comes to monetary policy. I had opportunity to work in monetary policy 10, 11 years ago. So it's very intricate, stimulating place to work. Typically, central banks are responsible for managing their country's foreign exchange and gold reserves, and also government bonds. So typically, you'll find big companies buy their raw materials in another country. Maybe in the UK, a lot of our big brands, they buy their raw materials from China or Taiwan. They do that. They have to buy. They won't buy in pounds. They'll buy in dollars, US dollars, or yuan, the local currency in China. So to do that, you need to buy the foreign currency with your pounds. Central banks have to make sure that we have enough foreign exchange to make that happen. And also gold reserves, because our pounds are denominated in gold, what we used to refer to as the gold standard. Less and less so now, but our pounds, our local currencies, denominated in gold reserves. So it's a standard way for other 1 ounce of gold is the same ounce of gold in China or in Turkey. So gold is a good way to measure standard across different currencies. And then the last thing is government bonds. So government bonds we refer to as sovereign debt. So to issue sovereign debt to pay for the country's, maybe say COVID spending from last year, we issue bonds, and then we use that to cover what was spent. And the last segment here is the neobanks. So your Monzo, your Revolut, Starling, all those digital, they are online only, as you know. Financial institutions, they are newer, and typically they have fewer products and services compared to your traditional high street. So if you look at Monzo, who I use, they have maybe 5 or 6 products. They've added a few more this year, premium products, but they've got maybe 10 products in total compared to, say, Santander or Barclays, who have hundreds of products catering for different people. So you tend to find that the digital banks tend to offer these products to those who are more technically savvy, younger people like yourselves, even my age range as well, in the 30s. So that's how these banks differ. If you didn't know, now you know. Now, let me explain how an investment bank is structured. If you want to understand what banking is, you need to understand the structure of an investment bank. The first thing to understand is that there are 3 parts to an investment bank. There's the front office, there's the middle office, and there's the back office. In the front office, you have a number of different roles, but I've put 4 here that will really stand out. So you've got the typical traditional trader that you're seeing on films saying buy, 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 sell, sell, sell. Those are actually salespeople, but we refer to them as traders. Traders are people who buy and sell products, what we call market making. They're market makers. They make a market. They say, hey, BT, do you want to buy, silicon or lithium batteries for, all the phones you're going to supply in the UK? And if you do, then you need to, why don't you buy these batteries, 9 months ahead? Because we know the price of lithium is going to go up in 9 months. You can buy it now. So you can buy an option to buy it at this price. You can lock in the price at, say, £1 per lithium battery. And we know you need 100 million batteries. So you can buy that. So they can make and sell financial instruments. And we'll look at what those instruments are. You may be asking, what are financial instruments? I'll explain that. And what they do is when they make a market, they get a fee from the buyer and the seller. Sometimes just the buyer or just the seller, but typically they'll get a margin, or referred to as a margin or sales fee. from that transaction. So for every, let's say, dollar or every pound the client transacts in, they'll get 5 cents or 5p from that. So they'll take a fee from that. And then you have salespeople. So one thing I'll say, traders, you need to if you want to be a trader, you need to be really good at thinking on your feet. You need to be really good with numbers, and you need to be very persuasive. And you need to have a good understanding of different financial instruments. There's a variety of different instruments, but the key thing is thinking on your feet. That's the best thing. Sales, they work very closely with traders. So typically you'll find traders sit on this side and salespeople sit on the other side, or they sit next to each other. You can't have a trader without a salesperson for a global bank. The salespeople are responsible for promoting the bank's ideas, what strategies they want to go. So I give the example of lithium batteries. Lithium batteries right now are at an all-time high because there's a shortage of those batteries from COVID, from lockdown. So it's all built up to where we are right now. So there's increased demand for lithium batteries. There's reduced supply for it. So whichever bank, the salespeople there would have had some kind of idea before that and say, look, we're going to create this idea to say we're going to really push a lithium battery as an example to different clients. And typically those clients are high net worth individuals, what we call sophisticated investors, entities, brokerage firms, family offices, so really, really rich families who have a structured family office, governments, actual governments, and then institutions, so really big institutions. And then they take those orders. So salespeople take those orders. So one key skill you need to have, not need to, but that really helps in sales is really good communication skills and being able to speak different languages. So you find typically people that sit in sales, they can speak French and Spanish and different modern languages. That really does help when you work in sales. And then you've got structured experts. Those are like the mathematical quants. Everybody's good in maths here, but generally, the structuring experts are like super maths experts. They work with really technical numeric issues. They structure the products, the financial instruments. They actually structure that, which is quite complex. So that's another area to get into. Some coding as well helps. So C++ is a language used in the front office. So that really helps when you design a product. And then investment analyst. So I started out as an investment analyst when I finished university, and I learned a lot that way. So I was an investment analyst. You write reports, you review companies or sectors or regions. So you could be an investment analyst for, say, the pharmaceutical industry. So all you do is cover big pharmaceuticals, big pharma, or you could be covering a region. So you could be covering Mint as a region. Mint is Mexico, Indonesia, Nigeria, and Turkey. Those are the next big economies outside the G20. Mexico, Indonesia, Nigeria, Turkey, Mint. So you might cover Mint and say, okay, actually, this is what's happening here, because they're fast emerging economies. Or you could cover different, you could cover telecoms or whatever it is. And you'll write reports on those. Those reports will go to the traders, to the salespeople, and that gives the traders and salespeople what to tell clients. Because you might tell clients, actually, you should buy this, or you should sell or hold. If you already hold those shares, hold on to it. So it's very analytical, hence why it's an analyst role. It's very research orientated, and you need to have really good report writing skills. So if you have an affinity for numbers or writing, investment analysis, it's a really good route. So that's the front office. Those are the 4 key roles to understand. The last thing I'll say here before I move on is everybody wants to be a trader. And what I've met a lot of people, what I tell people is being a trader has really changed over the last 10 years. They were the stars, they were the golden children of the bank, but that's really changed with technology. So what you have now is you've got algo boxes, algorithms that can do what a trader does, essentially. especially in the FX foreign exchange market. So a lot of big banks have introduced that, and I think that's going to gradually replace traders in the future. So you might say, I want to be a trader today, but that job might be outdated or relegated in the next 10 years. So something to be mindful of. And then you've got the middle and back office. I've just put those together. Those are what we call functions, where I now sit in. So even though I started in the front office, just the way everything has gone with investment banking, I sit more closely in the middle office now. So you've got the legal and compliance team. They deal with how the bank engages clients, making sure that we follow regulations. We're not breaching any regulations. There's so many regulations, hundreds and hundreds of regulations we have to follow. So we're compliant, but also not just that, we're in the spirit of the regulation. So we're ethical. We go above the regulatory requirements. And then you've got risk management, probably the most interesting area in the bank. Risk management, you have to analyze what we call market risk. And I worked in market risk, and I'll give you some examples what that looks like. And then credit risk, which is very different from market risk. Market risk is all about the risk from the market, from the stock exchange, from all of that. And then credit risk is more to do with like any risk of defaults, risk that we don't get paid, or our clients default, or our clients default, which has an impact on us. So putting the risk management controls in place, that's something you would do. Working with traders, taking into account the balance sheet, calculating limits, trading limits. So that's something that's very important. Risk management has really evolved since the big crash, the credit crunch we saw in 2008. That's when I finished university. So risk management has really grown into its own ecosystem. And then you've got HR. HR is human resources. They work to make sure that people are receive the right compensation. They're paid properly, but also that's also grown. It's also about making employees more healthy, more engaged. So where everywhere I've worked, we've always had a gym. We've always had healthy food served in the buildings. We've had counseling services and all these different things. Really, really good stuff. Healthcare as well. It's really lucrative to work in the investment bank. There's nothing like it because they cover yourself, but also your family with private healthcare. So that's something I've enjoyed for the last 5, 6, 7 years, and my family too. So they also help with setting out your career. So they work with how to set up a career plan, receive one-to-one training, and then they also review your performance. So HR is a big part. Treasury management is a very technical role. They play a central role. So if I was to explain it for you, the treasury in every bank is like a central bank. So they play a central role. They make sure that every part of the business in a bank, in an investment bank, has adequate funding. So they're not, insolvent. That they have the right capital structure. So that means that if a business is using all cash, cash is king. So they might say, let's structure how this business, fixed rate business or equities business, which is stocks, is pushing out money, burning. So rather than just using full cash for everything, you can use other things like treasury bills, for example. You've probably never heard of those. They're liquid instruments. It's like cash basically, or bonds, or some synthetic products like derivatives. So they look at the capital structure, they look at the liquidity risk, how quickly can we run out of money. So it's a very important part of the bank. And then the last bit is technology. So those who are technically savvy, it's a really exciting place because investment banks historically have had, to explain, they've historically had what we call legacy systems. So you'll find that even though for trading terminal, you have 9 computers. For one person, one trader will have 9 computers all stacked up. Those 9 computers have to be very, very quick, because every trade, when you receive a request for quote RFQ from a client, that comes in very quickly. You have to be quicker than other banks, because the client will go to different banks for the best rate. If they want to buy $100 million and they have pounds, they need you to do it just like when you go on holiday, you change your pounds for euros to go to Spain. It's the same with a big company, but a big company will come to a bank and say, I need to buy $1 billion with my pounds. Can you give me the best rate? So the FX trader has to receive that very quickly through their terminals and be able to provide a quote as soon as possible, ASAP. And they need to beat their competitors doing that. So the computers have to be super quick. The software has to be super quick. The position of the terminals, typically you find that trading desks are very important where they are in a building. So if they're high up, you might lose some latency, as opposed to if they're further down. So when I worked at HSBC, the trading floor I worked on was on the 3rd floor and the 3rd and 4th floor. And that was because of the position. It had to be in Canary Wharf to get information as quickly as possible. So working in technology is super interesting. It's a vast IT system. You also have to do controlled hacking to make sure that, if you do get hacked, there's a business disaster recovery plan in place. We also have a separate site. I shouldn't say too much, but banks would generally have a separate location away from the headquarters in case they've been hacked, so that they can reroute information somewhere else, which is top secret. So you get to work in all different things, penetration testing, cloud computing as well. So it's huge because it's a vast network. They've been very busy since lockdown because they've had to increase capacity for employees to work from home. So they've invested a lot of money around that, and they employed a lot of people to make that happen. So really interesting to know about the middle and back office, different functions from legal to compliance, risk management, HR, treasury management, and technology. I'll take more questions during the Q&A. Key skills to get into banking. I get these questions all the time. What are the key skills to get into? I would summarize. These are my points. The first one is problem solving. You need to be really good at problem solving. If you're not good at it now, that's okay. You can improve on that. There are different ways to do that. You can work on that. That's a skill you can build up on. But having a good grasp for solving problems really helps in any way you work in the bank. And the ability to then find a solution, and also working under pressure. That's probably my best skill, being able to work under pressure, solving problems. That's what you're paid for. That's the expectation. So that's the first skill you need to have. The second is presentation skills, being able to present like I'm doing right now, grab people's attention, but also convey your message to different stakeholders. So what we refer to as know your audience. You need to know your audience. So in this case, I'm presenting to young people. I've had to present in a different way. If I'm presenting to senior managers in a bank, this presentation will be very different. So being able to understand, engage your audience, very important. To grab your audience, very important. And convey your message, very important also. The third point is technical skills. So that could be advanced Excel. If you have advanced Excel, excellent, you're going to be in a great place. Or it could be coding, and increasingly banks are going into that because they've got these legacy systems. They need to really catch up with the digital banks now. So they're investing heavily into coding and future of internet of things and all these different things. So coding really helps you. There are different languages that are used in banks. The key ones, C++, SQL or SQL. These are really important languages, computer languages which are used. Financial modeling, which I used to do for a short period, really complex. You can, work different models. So that really helps if you have some kind of financial modeling skills. Modern languages, that could be, French, in addition to obviously your native English, Spanish. That goes a really long way. You get many opportunities within the sales teams for that, or even trading. So really great place for any niche knowledge like I've got with a few programs like Volcker. So I was referred to as a Volcker subject matter expert. That's really helped my career a lot. So if you can have a niche knowledge in a small area, not a lot of people know, specialist knowledge, that will really catapult you in your career. And then the other two, which I would say are commercial awareness and interpersonal skills. So commercial awareness, being street smart, being able to apply real life understanding to operational issues, very important. Commercial awareness is definitely the best thing. I'll give you some examples how you can build those up. And then interpersonal skills, being able to get on with people, very important. Build rapport, build consensus when a decision is required, and also mediate between people. It's a very high intense area, banking generally. So conflict is something you can't run away from. You need to be able to get on with people, but also bring people together. Very important to mediate. So one example I'll give here is of the Greeks. And I'll ask you during the call if you've heard of the Greeks. This is a risk management term. It's a mathematical term. I was fortunate to learn in my master's degree. So right across the bank, from risk management to trading to sales to credit risk to market risk, it's good to have this kind of, if you understand the Greeks, it really will help you. So alpha, gamma, theta, vega, rho, beta, these are terms which are used to understand risk, to quantify risk, and to mitigate risk. So alpha is basically a term that's used to represent an option, the sensitivity of an option. So an option could be FX forward or FX swap. That product has a specific function. So an FX forward, you could say to a client, why don't you buy lithium batteries today? But buy it, you have the option to buy it anytime from today up to 9 months time at a locked in price. So you could say we could buy it because we know the battery price is just going up because the demand is so the price is so volatile, demand is persistent. You have buy this option, and the option will allow you to buy at a fixed price, say at £1, even though the price is going up to £4 on the stock market. You've locked in the price with us, and the alpha will track that, so you can then buy anytime between now and up to 9 months ahead. So it's a really good opportunity to understand how alpha works. It measures sensitivity of an option like FX forward, FX swap, to changes of the underlying security. So another way you could also use alpha is if the price of, say, Tesla shares, I'm just using an example, is $500 per share. A bank can create an option which says for every dollar added to the Tesla share, so if it goes up to 501, 502, 503, the alpha of an option you've created, so it could be an FX swap or whatever, that could increase, you're selling this, that could increase the price of the option by $5. So it's not actually related to the underlying transaction, which is the Tesla shares. That's the underlying asset security. But you've created your own synthetic world. So it's a different world to the real world. These different products. So that's what they do. So you could say, like I said, for every dollar, every pound on the Tesla share, this option will increase by $5 or £5. And that's what Gamma does also. So you create your own world, and then you can sell that to different clients who want to make more money on the Tesla shares than the actual Tesla shares are offering. So Greeks create their own world, but it also helps you to quantify your risk from a risk management point as well. So having a good understanding or an introductory high level understanding of what alpha does or how gamma works, theta works, vega works, rho really help you as well. But I can take some questions. Vega at a high level, Vega measures volatility. So how volatile an asset is. So how volatile is my Tesla shares over 52 weeks? The Vega will work that out for you. Or theta here represents the rate of time decay of an option. So you can have an option that says, the example I gave you of the option to buy lithium batteries between today and 9 months time, 9 months to do that. So the theta will calculate the risk as you get closer to the end of the 9 months, because after the 9 months the contract expires. So all these different Greeks, they're based on contracts. That's one thing I'd say. It's a contract between you and the client, the bank and the client, or even the client's clients. And theta would say the risk increases as we get closer to the end of the 9 months. So that theta is there to measure how risky it gets within that period, that time frame. And then rho represents the sensitivity of the price of an option relative to interest rates. So I'll give you a quick hint. Interest rates are going up next week. Yeah, and so rho right now in real life for different banks, rho is calculating how sensitive different shares are to interest rates. Some shares are more sensitive to interest rate changes than others. So one example, just thinking off the top of my head, would be your mortgage products. So obviously a mortgage deal. So if you go to your bank for a mortgage, you would get it based on the base rate. So the base rate right now is 0.1. So it would be 0.1 plus what the bank is charging, what Santander or HSBC or Halifax are charging you. So it could be 2%. So you would get 2 plus 0.1. So it would be 2.1% for your mortgage. But we know that the base rate, if it changes, that's the interest rate, then that product is also going to increase. If it's not fixed, if it's a variable rate, it will go up. So if that, so the rho would measure how sensitive mortgage products are in the face of a change with the interest rates. So Greeks, really good thing, technical thing to have an understanding of. You don't need to be an expert, but just have a good understanding of it. Key habits to build. We're getting closer to the end. I would say daily habits. Read the Financial Times. I've got a copy here, which I read to my 4-year-old daughter. She bought it on Monday, and she started reading it. So by the time she's 14, she should be an expert with understanding what's happening financially in the financial world. So a good place to start. Financial Times. Your college or university will have free copies of that. Or student discounts. Yahoo Finance, which is actually free, is brilliant. I look at every day. Or Gen Money, the company I've started, where we're getting more interns and more analysts. So you're going to have similar content from us coming soon. Read The Economist, very important place. Download some of the following apps: the McKinsey apps, the best consulting firm in the world. INSEAD, one of the best business schools in the world. Harvard Business Review, from the best school in the world. Those apps are free. I still can't believe it. I read them every day. Those apps are free. So download those, read those. That will build your commercial awareness of what's actually happening. And you can then, with time, articulate that when you go for an interview or whatever. Follow market news, Google Finance, Yahoo Finance, Bloomberg. Cultivate your online brand. So create a LinkedIn profile, start making connections, and set up an email address if you don't have one. So not, Joe Blogs star01@gmail.com, but have like kind of your name. So Godman Usman @gmail.com. It's a really good place to start. Subscribe to the relevant YouTube channels you're on. So I know you use YouTube or Snapchat. You can also follow some really interesting people on those platforms for a really fun way of absorbing content. And then the last one is attend talks like this, seminars, webinars, listen to podcasts. I listen to podcasts every day on a variety of different things. It's a really good place to build. These are the key habits that will get you into banking. Risk management model. One of the last thing I'll mention is every bank has 3 lines of defense. So first line, which is the business, the front office, they have their own internal control, management controls, and then the second line, which compliance plays a role in, risk management plays a role. There's quality assurance and also anti-financial crime, because the banks are always targeted by financial crime people. So very important. Second line plays a very important role to make sure that there's adequate risk management in place. Banking is all about risk management, and that's why I brought this up. And the third line is internal audit. So those who want to be auditors, highly respected role. They're almost like the police in the police in a bank. Each line has to be separate from the other. You can't have contamination. They have to be separate, especially the third line. So they tend to sit physically isolated from everybody else. And then you've got external audit. So your KPMGs, your PwC, your Ernst & Young, and other consulting firms, they will come and audit externally and provide a report to say, are we doing bad things, naughty things, or good things? And then the regulator, the FCA, the Financial Conduct Authority, is the big police, and they tell us what to do. So that's the risk management model. It's good to understand that, because there's so many opportunities to work in compliance or risk management, financial crime, which is its own discipline now, internal audit, or within the business, internal controls, or if you wanted, with the FCA or a big 4 companies. So what are the key issues for banks? And I think this is the last one because time is going, is one, regulation. It's the most regulated industry in the world. Banks are global. You saw in the beginning, banks have been referred to as banksters, barbarians, masters of the universe. That's because of the control they have. If a bank collapse, a big bank collapse, it has an impact on all of us, as you saw 2008 and even since then. So there's been a wave of regulations which have come in. Some of them I've mentioned here. MiFID II, huge, came in 2018. EMIR came in, huge. This was to bring more transparency to when banks lend to each other, because some of it was what we call OTC, over the counter. So it wasn't declared, it wasn't on the stock market, it was just between 2 banks, and they didn't disclose it. So when one of the banks collapsed, the other bank said, hey, we borrowed 100 billion to this bank, but they're insolvent now, so we're insolvent too. And then there's a domino effect. So EMIR came in to say, actually, if you do OTC transactions over the counter, then you need to post variation margin. So if you put, for every pound, you need to put 5p aside for that transaction, just in case you don't get the pound back, you've got 5p to cover your basics. So that's the way I would explain EMIR. PSD2 on payments, you probably haven't even noticed it, but every time you go on online banking, you would have noticed over the last 2 years, the controls have enhanced. There's more stringent controls, 2-factor, signing on, all these different things. Online banking, you need to then go to your mobile to authorize it. That's PSD2. FRTB, that's to do with market risk, which I worked on a few years. So enhanced controls with market risk. COVID-19 came, that was huge. That required central banks to pump money into the economy. And the way central banks did it was to pump all of that money, but they gave it to big banks, investment banks and retail banks. And then that went downwards to businesses and then to us. So it trickled down, trickle, 4 layers. So that required banks to fund in through SIBLs and BIBLs, business banking loan guarantee schemes. But also digitization. Everybody had to go online, including banks, plus all their channels, online banking, all of that. They had to invest in that, open banking. And then government funding, with a low base rate, so interest rates went to historic lows, and they're still at 0.1. High levels of capital because there was more risk as well. So we had to post more capital, adequacy capitals, liquidity capitals in case there was a default. And then Brexit, which is a lasting legacy, really. Cost of capital has gone up. So to borrow money from the central bank has gone up. Liquidity obligations, we have to post more money to be more liquid. More competition from the Eurozone, increased competition, and then just longer term changes that have come with Brexit. So it's been very challenging, a very challenging environment. How to get in banking, I'll end here. Through university, through internships, or through apprenticeships. Apprenticeships, there are 4 levels to that. Intermediate, you need 2 GCSEs. Advanced, level 3, you need 5 GCSEs. Higher, in apprenticeships, which are level 4 or 5, you need 2 A levels. And then a degree apprenticeship, you need, which is level 6 and 7, you have to be 18 plus. And you need, I think, minimum 2 A levels and 5 GCSEs. The pros and cons are here. I'll probably stop here because of time, but this is how the traditional way to get into banking. Through university, like I mentioned, summer internships before you finish university, or the graduate program after you finish university, or off-cycle internship before or during or after you finish university. Get in touch. My name is Godman Usman from Gen Money. I hope I've helped some way. I'm on LinkedIn. Follow me. Follow Gen Money as well, and reach out if you have any questions. Thank you for your time.
Godman, thanks ever so much for taking us through that. One of the best bits about your presentation is that you've actually answered a lot of the questions that we've had come through as well, which is fantastic. So what we'll do, if it's okay, is we'll go through a few of these questions. We'll just quick fire through them, and we'll get through as many as we can. I'll avoid asking the ones that you've already answered, things about how to get into banking and that sort of thing. So if anyone would like to catch up on that, then when this recording is available, just head back a couple of slides and you'll be able to hear Godman talk about different routes in and the skills that you would need to get into banking as well. So let's start off with this question. We'll just quick fire through a few of them. What's the work-life balance like as a banker?
Wow. So the hardest part of banking is investment banking. Not as stressful as retail banking. Retail still quite stressful, but I've worked in retail, I've worked in central banking, I've worked in investment. Investment the hardest. It's improved. So it wasn't what it was like 10 years ago. And not just because I was a junior when I joined, but because there's more, like I mentioned, HR, human resources has evolved as a function itself. So not just looking at, oh, we've paid you, you do your work. They also look at mental health. They provide services for not just you, but also your loved ones, so your families. They tend to have these packages in place. So that's improved a lot. And more so with 2020 lockdown, we all had to work from home. And the banks did a great job. They invested money they didn't budget for to make that happen. So it's been a lot better. It's the best it's ever been, I would say, because banks have gone that way of working from home. So right now the narrative is hybrid working. Some time in the office, some time at home. That's the best scenario I've always wanted, and that's what I've got. So it's really good right now, and banks are listening to employees.
Great stuff. Question here: what do you enjoy most about your job?
The global aspect. I've always wanted to. When I worked in retail banking, I worked on the high street, which was amazing because it was High Street Kensington, so it's like the best high street in the country, and the most affluent area to work in. But I had a yearning to work with global teams, working on global issues, impacting. You see the projects I was working on were in the newspaper. So the best part of it for me has been working on global teams. So working with teams in the US, working with teams in Asia, and being in London. You're the middleman because London's is the time difference You get to work if you log on very early. You get to work with people from Asia who are just about to close for business. They're about to go to bed. You're just waking up, and then by the time you're about to log off, the US team have opened. So being in London and working in banking is awesome because you get to work with Asia and the US, which I always wanted to. I was always fascinated with Wall Street. Got to work with people who had their offices in Wall Street, which is awesome, and being able to travel. So that's like the personal side. Professionally, it's the commercial awareness. So being able to like work on commercially sensitive topics, constantly learning, constantly challenging yourself, working with very smart people. It's been really, really great. And probably the best thing I've ever done is working on Volcker. Volcker basically came in to separate investment banks from retail banks. So if you've got like say Barclays, we've created Barclays International, which is ring fenced. So that's the investment banking arm from Barclays UK, which I now sit in, which is a retail element. And the good thing with that is to say we will never have a situation where an investment bank collapses, like we saw with Lehman Brothers or Bear Stearns and or RBS, and then the retail bank goes with it. And when the retail bank goes with it, you've got systemic risk. The entire economy is contaminated. So that's probably been the best thing I've ever worked on.
One of the questions we get asked a lot, and it's come through a couple of times, is sort of where should I study if I wanted to get into a career like that? Would the answer just generally be, you know, a well-respected, you know, university or institution that primarily focuses on finance and that sort of thing, and economics?
Yes and no. It helps. It does really help if you studied, you know, economics at London School of Economics. That will open doors, you know, or Oxbridge or whatever, or UCL or Queen Mary. That will really help. But I've also worked, and some of the smartest people I've worked with studied at, you know, university you've never heard of, or they studied overseas, or just like community colleges, whatever it was. It's about your tenacity. It's about you and how you package yourself and how you brand yourself. So it's you know, that's the difference. So yes, if you can study something quantitatively, you know, challenging, doesn't have to be. I've also worked with people who studied art, zoology, geography, but they also go into banking. So one thing I'll say is to get into banking or a graduate program, the ones I showed earlier, to get into a graduate program, you don't have to study economics or finance. You can study anything else. What they want to see is, did you get the right grades? You will get tested also. As you can see here at the bottom left corner, I've said you'll be invited to sit a numeracy problem-solving test. So it's how you work on those skills outside, you know, your school or your education. That's really what matters. But yes, it helps if you go to a top school or top business school, top economics department. But it's really how you apply yourself. That's the key.
And we have had a few of those questions come through, you know, what sort of qualifications do I need, that sort of thing. But you've answered all of those in saying essentially, you know, it will be a great help for you to go to one of those top schools, but it isn't an absolute necessity to do that. You know, in order to work in banking, you don't have to necessarily have gone to LSE and done a,
Yeah.
you know, an amazing degree in that. Like you were saying, you know, you've got, you know, people who have done all sorts of degrees and then end up in banking. So it's a huge element of the personal traits of that person as well.
Yeah.
Godman, thanks ever so much for taking the time to be with us here this morning. Your presentation was fantastic. Just a reminder to anyone else that is watching, you can go back and watch this at any time as well. And also you can get Godman's socials and links to Gen Money as well back in the presentation. But once again, thanks ever so much for taking the time to be here today. We really appreciate it. Just a reminder, don't forget to get all your work submitted and get the program completed by November 12th. That's November 12th in order to be eligible for your certificate. You can find all of the important dates in module 1 of the platform if you need reminding. Good luck with the rest of the program, and we'll see you really, really soon. Enjoy the rest of your day. Take care. Bye-bye.
Awesome. Bye, guys.